Hey guys, how you doing today? This is Ryan with TrendLizard.com. I hope you're having a wonderful day and everything is right in your world. And I've got some good news for you. You're on YouTube, you're looking for Elliott Wave education, well, you found the right spot. A lot of the stuff that you're going to find out there is going to be confusing, hard to understand, really hard to put into play. That's not what we do here. We're here to bring Elliott Wave to the masses to make it super understandable so you can get into good trades time in and time out again and to put yourself into low risk, high reward setups that are going to make you beat the stock market on a consistent basis, time in and time out. We've put out a lot of videos over the last few months. I've shown you the power of this theory. We've shown you how to make winning trades, how to keep your risk tight, and I'm going to continue that today. We're going to take a close look at gold as well as silver to show you what's going on. This isn't the first time I've done videos on these guys. In the past, I've shown you how they are still pulling back off their 2011 high. 8 years later, they're still not done with that. That has not changed. However, there are some good buying opportunities along the way, and this looks like it could be one of those opportunities. I'm going to show you exactly why using super understandable Elliott Wave analysis. So let's dive in, let's take a look, see what we have to see. Here we go. All right, guys, so let's start with gold here. This is gold, the continuous contract, end of day, ticker money sign GOLD on stockcharts.com. So let's dive in here. Nothing really matters up until 2001. You can see this big choppy down move. Doesn't matter to us. What's very clear is that the big up leg that played out from 2001 up into the late 2011 high, very clearly super beautiful 5-wave trend. I mean, we don't need to label it. We do, obviously. You can see that everything counts out as it should. Every up leg is a 5-wave move. The overall move is a 5-wave move. But honestly, who cares? I mean, it's very clear this is a counter trend move. This move went from under 300 up to 1900. Obviously, it's a trendy move. It just so happens that it's also a perfect Elliott Wave 5-wave pattern. From there, a very large pullback has emerged, went from 1900 down to nearly 1000 and has chopped around for the last few years since then. There is no good reason to think that this pullback is over. There's nothing that happened to the downside that suggested it was over as far as an ending pattern, and what's happened to the upside since then does not look like the start of a new trend. I mean, you look at the way this move started, it took off to the upside. I mean, that's kind of what you see when new trends begin. That is not what we're seeing here. What that tells us is that this pullback that began in 2011 isn't over yet. This is probably the first leg of a larger 3-wave pullback that could end its way somewhere around 900 or find its way towards 900 before it's ultimately over. However, it does look like a buying opportunity is at hand for the shorter time frames, and I'll show you why as we dive in. But the thing to remember again is it appears that an A wave down completed here, and we're probably in a B wave recovery, and that will be followed by a C wave down. So on a long-term time frame, don't be bullish on this guy. It's not bullish. It looks like it's going to continue down overall. But on the shorter time frames, there are opportunities. Let me show you what I'm talking about. Here's a look at a little bit more detail on that pullback off the 2011 high. There's different ways to label this down leg. It certainly can be labeled as a 5-wave move, as you can see here, which can happen with A-wave declines. What's happened since late 2015 is that gold has been in this recovery effort. It has found some strength more recently, has been in a nice sharp up move, and it looks like it has higher prices in mind from here as the C wave of this B wave. So the B wave itself is a 3-wave move, right? And then you have the C wave down from there. It appears as if the last leg of this recovery portion of the counter trend recovery is at hand here. So where might this end? For one, we're looking generally in this yellow support area. As you can see, it was tested back in 2016, tested again in 2018, keeps turning price away. I don't think it's going to happen this time. I think it's going to actually continue deeper into the yellow support area. Now, a level that you might want to be watching is around 1500 to about 1550. That is where this C wave up that began in 2018 becomes the same size as this up leg that played out mostly in 2016. So that would put you in the middle of the yellow resistance area, as well as at a level where the C wave equals the A wave, and that frequently happens when you're looking at 3-wave moves. So this looks like a buying opportunity in the midterm. Let's take a look a little bit closer. This is the recovery effort off the late 2015 low. Again, this does not look like the resumption of the overall uptrend. We know that trends play out in 5-wave moves, and this up leg does not look like a 5-wave move. As you can see in early 2016, it looks like one three-wave move right off the bat, suggesting that this is not the resumption of the long-term uptrend. Since then, we've traded around back and forth so long, it's just not the stuff of trends. It is a larger recovery, and it looks like a buying opportunity. It's trading at 1330 right now, and if you can buy it and it heads up to, say, 1530, I'd say that's worth your time. The key with gold is that it stay above 1260 at all times. If it moves below 1260, no dice. This is not a good buying opportunity. So you can buy it now. You can wait for some type of near-term pullback for a better entry point. But either way, as long as it's trading above 1260, gold is going to appear as if it's on its way to higher levels. All right, so let's shift gears here. Let's take a look at SLV. That is the silver ETF, most popular silver ETF, and it's the best way I know to easily trade silver. Now, we have a lot less data on this guy. It's a newer ETF. It only dates back to 2006, but what we have, somewhat similar to what we saw with gold, is you have this nice up leg that completed in 2011. Again, the details really aren't that important, but it does count out as a 5-wave move, but very clearly it's a trendy move, and very clearly it ended because off that 2011 high, SLV or silver has just pulled back a ton since then. It took back most of the value that was gained in that advance off the 2008 low. So again, you can debate as long as you want what this down leg is that moved down into the 2016 low. It doesn't matter. It appears to be part of a larger counter-trend pullback, but most importantly, it does not appear complete. You can see that low that was recorded here was retested recently in 2018, making it very clear that whatever started here is not the resumption of the uptrend. It can't be because it's been fully retraced by this pullback here. So it appears to be in a larger counter-trend pullback that began in 2011. It's currently in the recovery portion of that move off the 2016 low, and right now looks like a really interesting opportunity because it found support there and it's bouncing, and I'll show you why that makes it look like a buying opportunity. If we zoom in and look at that recovery off the 2016 low, you have this up leg that was completely retraced, so obviously it's a counter trend up leg. That's not what interests us. What interests us, excuse my bad language there, is the nature of this pullback off the 2016 high. Now, we know two things as far as Elliott Wave is concerned. Trends play out in 5 waves, and counter trend moves play out in 3 waves. So if we know that and we look at this move, what does this move look like? It is a very clear 3-wave pullback. So if we know that counter trend moves are 3 waves and this move is 3 waves, what does that tell us? It tells us it's a counter trend move and therefore not the resumption of the downtrend. It's not a resumption of the move that started in 2011. You're seeing the strength here. It's a good indication that whatever began back in 2016 looks like one large flat recovery has resumed, and that you have the setup for a lot more strength from here. So what you would be looking for in this C wave advance is again for something similar in size to what we saw in 2016. Now, if that happened, that would bring silver all the way back up to about 1950, which was the high it recorded back in 2016. So you have a pretty good setup here based on a very clear 3-wave pullback over the past couple years for a much stronger move. It's shown a lot of strength and a lot of potential off of the recent low, and this looks like the start of a move back to 1950. So if we dive in a little bit deeper, you see what's happened since late November. We're starting to see some trendy upside movement. This is a very clear 5-wave move. It looks like a larger counter trend pullback might be at hand here off the late January low, one that could move its way back down into this yellow support area. As long as SLV or silver stays above 1390, this is going to look like a buying opportunity, and you can look at buying into any breakout that happens from here as long as it stays above 1390. And certainly you want to trail your stop from there. My advice would be to just not allow any new up leg to be retraced by more than 61.8% at any point in time. And that would be your trailing stop, right at 61.8%, a 61.8% retracement of any new strength that happens. And again, it looks like the path is paved for a move all the way back to 1950. So yes, the pullback that began in 2011, not over yet, very clearly. There's no reason to think that it is. However, it looks like there's some relief coming from the big sell-off, and it looks like we're going to get a much larger recovery in the meantime, and it's a move that, in my view, is very much worth trading. So we're going to take a look at one more thing here. A lot of people trade the XAU, which is gold and silver, so I want to throw that in as well. This is the gold and silver index. It's a very similar outlook. You have a very strong advance off the 2016 low into the 2016 high. You have this pullback here that is very clearly a three-wave move. There's no debating it. You just can't label this as a trendy move. Very clearly a three-wave move. Now you're getting strength. It looks trendy. It looks like it wants to head a little bit higher, or quite a bit higher. So if we take a look at the actual strength that's playing out here, it looks like it's in a progression that's going to become a trendy move. It's not there yet, but it needs to stay above 72 at all times. As long as XAU stays above 72 at all times, you're going to have a setup for a much larger up leg to emerge here, to eventually make this entire recovery one big three-wave move. But all you care about is that you're in what's going to be a trendy up leg here that should move above the 2016 high, take you quite a bit higher, and represent a very good buying opportunity. All right, folks, so there you have it. That's what I'm talking about when I say gold and silver look like they could be a good buying opportunity in the midterm. Look, we're not trying to come up with any complex or confusing or creative Elliott Wave patterns here. We're looking for the most basic patterns and the obvious patterns when you're looking at a price chart. We're looking at what moves look like trendy moves, what moves look like counter trend moves, and what that implies as far as future movement is concerned. Not only that, but it gives you very clear definitions of what you should expect. It tells you where price shouldn't go, and it tells you where you can kind of expect price to go, so you have an idea of where your gain or where you might want to close your trade out. So I hope that's helpful. We work hard on these things. I'm trying to put out better and better videos for you all the time. Please subscribe to this channel. It's obviously free, and we're going to continue to put out really good information that you can't miss. They're just good opportunities for you to trade, to be a stock market master. So have a wonderful day. We'll talk to you again very soon. Take care.